Hello, this is PJ Denuzzo with Dimensional Fund Advisors DFA conference call recap. The best way I can explain my thought behind this video and sending this out is if any of you are NFL football fans or even remotely familiar with NFL, after the college season's over, about a month ago, they did this. They brought everybody into Indianapolis. They have the Indy Combine where they bring the top ranked players at every position. They'll bring the top 10 wide receivers, the top 10 offensive guards, etc., something along those lines. And they'll have them work out. They'll run a 40-yard dash, a high jump, a broad jump, bench press, etc. And if you think about this, these general managers and information has been available on a lot of these players since grade school, junior high school, college. They've visited them at college. They've seen hundreds of hours of film. You're going to make it a $100 million investment in a ball player, or even if it's a $25 million investment. They know everything about these folks, but they still haven't come out to the combine in Indianapolis. And pretty much to the letter, you listen to any general manager is, why are you bothering? Why is it important to have them come out whenever you've got all this data and information? Basically, they know the name of the girl they were dating in 7th or 8th grade. And the general managers and the owners or anybody, especially the general managers, will say almost verbatim, very consistently, we just wanted confirmation. So we're on conference calls with DFA all the time with the Brain Trust at Dimensional Fund Advisors. And again, this is a firm that was started by David Booth and Rex Singfield, grew out of the soils of the original indexing efficient market theory. These folks have been keeping track of efficient market theory and indexes longer than anybody else in the country. When Jack Bogle from Vanguard started the Vanguard S&P 500 fund in 1976, he was handed a prospectus from Mac McCowan, who has been on the board of directors, I believe, for 4 decades now. So again, these folks were there from the soil that indexing and efficient market theory grew out of, and they have been our de facto research and development department for almost the entire 31 years we've been in business. So again, it's basically, we know a lot of the information, but we want an update. We just want that physical confirmation as human beings, just to listen to them in the current market environment that we're going through. Again, DFA currently manages over approximately $600 billion. And they're arguably the largest market, the largest manager and trader on earth in a few areas. Small cap stocks, for example, I don't know anyone who trades more small cap stocks, U.S. small stocks, than Dimensional Fund Advisors DFA. So really a great place to put your ear to the ground to know what's going on in the market right now. So on a conference call that our portfolio management team sat in, and a number of our lead advisors, our lead wealth advisors as well, the chief investment officer, Gerard O'Reilly, was on, made some really great large points and observations about the market. And again, the market's a clearing mechanism. The market's there to facilitate the transfer of a sell or a purchase, concurrent, the sell of a security and the purchase of a security. And we like to see the markets being liquid and everything functioning as normal. So Gerard made a lot of great points that securities are clearing through the market. We had a couple of hiccups that I'll talk about that the Federal Reserve came in and cleaned up, and they just did a phenomenal job. Couldn't be happier with the Federal Reserve and the liquidity and stability that they brought to the marketplace. We had on also the head of global equity. So this was the head trader for U.S. and international, all global trades on the equity side, on the stock side. And finally, Dave Plecka, who's the head of global fixed income. Fixed income is a fancy word for bonds. I've been talking to Dave Plecka for almost 30 years about bonds, and thank goodness for us that he loves them. And, bonds to us aren't very exciting, but I have never met anyone more knowledgeable regarding the fixed income market and bonds in particular than Dave Plecka. So to hear from all of them that all the order flows are going through, the daily purchases and sells and everything that DFA is doing, especially for the volume that they do. Again, they're a patient and consistent seller and buyer. They don't need that immediacy that oftentimes a lot of active traders do. And they were given a number of stories about active traders who are leaving a lot of money on the table because they have to buy a certain security because it got added to their buy list, or they have to sell a certain security for certain reasons. And that's always been a large part of Dimensional Fund Advisors, of DFA's value add over the years, that patient trading strategy that they have. ETFs, a lot of times folks will look at ETFs, the electronically traded funds, whether it's an ETF stock fund or ETF bond fund. Whenever you get higher volatility and there's a disconnect between, somewhat of a disconnect between buyers and sellers on the market, and there's an imbalance, what if there's only one buyer for every 10 sellers? And the ETFs saw some gaps that opened up last week, some spreads. Even on the S&P 500, a number of the S&P 500 ETFs had spreads of 10 to 12 basis points. That's a fancy word. If it's 10 basis points, it would be about 1/10 of 1%. But to give up 1/10 of 1% in performance, so this won't show up on your, we would say with mutual funds, OER, operating expense ratio. This won't show up on this, but this would be a direct subtraction from your performance of your investment, that you paid an additional premium to be able to buy that basket of stocks over and above what they were actually trading at in aggregate in the market. Some of these spreads last week got up to even close to 100 basis points on small stocks and less liquid areas of the market. There was one day that the BND, Vanguard's bond fund, was trading at a large spread of, I think it was even for a short period of time, maybe up close to 6%. So again, when you go through these market periods and someone's demanding liquidity, the ETFs can have a large disconnect regarding what you're paying for that literal underlying basket of securities. So just a word to be cautioned there, that there's additional costs and expenses that a lot of people don't realize in a lot of cases. Again, we're very happy, like us going to the Combine as an NFL general manager. The market liquidity is very strong, especially thanks to the Federal Reserve. The Federal Reserve has just done a phenomenal job. They've actually come in quicker and faster and more astute and accurate than they did during the 07, 08, 09 meltdown, even 08, 09 especially. And with the programs and the areas of the market that they've come up and they've shored up, is just a tremendous amount of peace of mind. You may have heard the old saying, we're in a bear market right now. Bear market, we would classify as any time that the stock market goes down more than 20% from its high. So of course, you know, we were at our high approximately a month ago. This is the fastest bear market in history. But anytime the market comes down into a bear market territory, that's what we're discussing. So caution. The caution here is unintended consequences. So you have something that started as the coronavirus, which was an emotional issue, but there are unintended consequences because now you've affected the capital markets. And that's the issue that we're sensitive to, and we're very confident. And again, we're on constant calls with DFA. They're trading an enormous size of trades. It gives us a lot of confidence to know that everything's running smoothly, and what's backing up our stock and bond institutional mutual fund positions. Oftentimes, well, probably 99.9% of the times, the average human being wouldn't think about credit markets or the bond markets, but these are the literal footer and foundation. Everything. Stocks are up maybe in the attic or what have you, but the footer and foundation to our economic system is the bond market. There's multiples more value traded every day in bonds as they're in stocks, even starting with the most basic of building blocks: money markets, short-term paper, short-term, ultra short-term bonds, government, moving on all the way up through the system. So again, that is the bedrock, and that needs to be unflappable. Needs to be completely locked down. The Federal Reserve has come in, and it's wonderful to see them again come in with more programs, and better backing. And these are all things behind the curtain. The average individual would not know these are going on or have any idea even what they are. But those are the type of things that we're watching over on a daily basis. So we're very well pleased with the Federal Reserve's actions, swift and very accurate moves. Again, very reassuring for all of us. Again, I would like to thank you for listening in today to the DiNuzzo Wealth Management Market Insights. This was basically sort of a pulse check just to make sure that everything behind the curtain and behind the scenes is operating as it should. Again, this is PJ DiNuzzo, and I want to thank you very much for listening in.